Tesla sales have been on absolute fire in 2023. They've broken many production and delivery records. As an example, the Model 3 and the Model Y, which are Tesla's midsize SUV and sedans, have about 56% of the EV market share right here in the United States. And the Tesla Model Y is not only the best-selling EV in the world, but it's also the best-selling car in the world, period. Now, I have many thoughts as to why this is the case. So for the last few weeks, I've been trying to collect data that tries to prove this out from a numbers perspective. The data that I've collected shows that Tesla's dominance is not just here to stay, but it also sets up the company to dominate well into 2024 and into the rest of the decade. And in this video, I would love to show you what I've learned. So without further ado, let's go ahead and get started. Now, there are two main reasons why people want to buy EVs. It's cost and range. And so what I did is I took every single manufacturer in the US, I looked at their EVs, and I put in a big spreadsheet their costs and the range for every model that they offer. And when I'm looking at the pricing, I'm also taking into account the federal EV tax credit, which is up to $7,500 for vehicles that qualify. And I'm also taking into account the Tesla Model 3 refresh, which isn't live in the US, but it should be imminent in its launch. Based on every other region in the world, this is going to raise range by about 10% and pricing by about 5%. In total, there are about 64 models and trim combinations that are available for me to analyze. And to really understand where the differences are, I put them on a scatter plot. For those that are not familiar, a scatter plot is really useful to understand the relationship between two variables. In this case, as an example here, you have in the x-axis or the horizontal axis, the years of experience that somebody has, and the hourly wage that correlates with that experience. As you can see, as the experience goes up, the hourly wage goes up with that experience. And so for this use case, what I did is I took the price and the range and I put one on one axis and the other one on the other axis. And this made the findings super obvious, and you'll see what I mean once I show you the chart. Now, I want to start by showing you a scatter plot of United States electric vehicles, specifically sedans and SUVs. And we're going to look at that relationship between pricing and range. First, I want to show you the full scatter plot to kind of give you an idea of what I'm looking at, and then I'm going to zoom in specific areas where Tesla is currently to really highlight why they are so ahead of the game. So here's what the scatter plot looks like. You'll see that you have blue dots and red dots. The blue dots are non-Teslas and the red dots are Teslas. On the horizontal axis, you have the net price, so the price of the vehicle including the EV tax credit. And on the vertical line, you have the range, which is how far the car can go in a single charge. And this purple line, which is really important, describes the average price for the range that you get in a specific price bracket. So for example, around the $80,000 mark, $80,000 to $70,000 mark, the average range for a price given all the EVs in the United States is roughly 300 miles. So any cars above that line have above average range for the price, and any cars below that line have below average range for the price. And I want to start by showing you the upmarket trends from a pricing perspective for Tesla and its competition, which is where I've highlighted this red box. Now, if I hone in specifically where Tesla is playing in this price bracket of about $80,000, you can see that all four of their models and trim combinations are significantly above the average range you get in that price bracket. The only competitor in that area is the Lucid Air Pure, but you can see everyone else is playing underneath where Tesla is from a range perspective. Another way of calculating this difference is that Tesla is about 25% above average range for the money. And if you compare Tesla's pricing not against the blue line, but where the average of these blue dots are, Tesla has about 35% more range than the competition in that price bracket. And so it shouldn't come as a surprise that Tesla is performing extremely well in the high-end luxury market in the United States with their Model S and Model X cars. But the difference is even more severe if we look at where Tesla is truly dominating, which is in the mid-size price bracket with their Model 3 and Model Y. So let's go ahead and shift our focus from the higher-end market to the lower-end market and look at where Tesla's playing around the $40,000 bracket. Now, making sure that we take into account those slight pricing and battery changes with the latest Model 3 refresh, you can see that the Model Y and the Model 3 cars are playing all by themselves in this area of the chart. And again, very similar to the Model S and X, you can see that the range is oftentimes significantly above average. If we take the average of those four models, Tesla is about 17% above average range for the money. And if we compare Tesla to their competition in the same price bracket, which is this blue square down here, you can see cars like the Ford Mustang Mach-E, you can see the VW ID4, the Hyundai Ioniq 5. For the same pricing, they get significantly less range. Tesla's competition gets about 10% less range than average for the money. And if you compare the difference between Tesla and the competition, Tesla has about 34% more range than the competition in that price bracket. It shouldn't be a surprise that in that specific price bracket, Tesla is absolutely dominating, and that's why they have 56% of the EV market in the US and why the Model Y specifically is the best-selling car in the world. But there's another way of looking at this. Instead of focusing on cars that are in Tesla's current price bracket, we can also look at cars that are out of Tesla's price bracket but offer similar range, which is what this green box is highlighting. These are the cars that are about the same range as a Tesla but are significantly more expensive because they are to the right of the chart. And so if we analyze that box a little bit further, these cars are about 30% more expensive than the competing Teslas for about 5% less range. And so if we think about how the competition tries to fix this, there's only really two ways. You can either take the cars in the same pricing bracket and figure out how to give them more range, which is another way of saying move the blue box up, or you can take the cars that are to the right of the Teslas, which are more expensive but have similar range, and figure out how to move the green box left, which will decrease the price to the customer for those cars. However, here's the problem. If the competition decides to take the blue box and move it up, what this means is that they have to add range, which means more costs, which means less profits. And in the case where competitors want to move this green box to the left, which another way means reducing the price to the customer, this means that lowering price will equal less margin, which is also less profits. But the common theme there for the blue box and the green box competitors is that those companies have to give up profits regardless to try and be competitive by either increasing the range in an already cheaper car or lowering the price in a car that has more batteries in them. And of course, this is very troublesome for legacy companies, which are Tesla's competitors, because these companies are already losing a ton of money on their EV business. And we can see this by looking at Ford's latest quarterly reports, where they show for the last quarter of 2023, so the second quarter, the company lost about $1 billion alone in that quarter just from their EV business. And even though the other legacy companies don't report their earnings for the EV divisions, it's very safe to assume that these companies are experiencing the same exact thing as they ramp their EV business. And so when we look at the data here and we look at how Tesla has been performing in 2023, in my opinion, the disadvantages of the competition are very, very clear. They either have cars in the same price brackets that don't have enough range, or for the cars that they do have enough range, they're way too expensive. And this really highlights the difference in the technology and the manufacturing capability between Tesla and its competition. And it's important to remember that at those pricing brackets, Tesla is making around 20% margin or profit on every car sold. So they're selling cheaper cars than most car companies and they're making money on them, while everyone else is mostly selling more expensive cars or cars in the same price bracket but for less range, and they're losing money. Now, this could get even worse for competitors as Tesla is getting ready to launch its Tesla Cybertruck, which will likely start deliveries in the next month or so, and its compact car, which is a smaller vehicle, a compact form factor, where they're targeting to come in somewhere around $25,000 to $30,000 before incentives, which means that there are two giant segments that Tesla is not even playing in, and they're still able to have the record-breaking numbers that they have. What's also fun about this scatter plot is that we can use this methodology to figure out where the Tesla Cybertruck and the compact car are going to come in. Now, this is the same format as the previous scatter plot, but instead of SUVs and sedans, I have electric pickup trucks on this chart. And if we follow the trends that Tesla has in the SUV and sedan market, we can assume that the Cybertruck is likely to come in around this area of the chart, which means that a Cybertruck, at least the best-selling models, are likely to have somewhere between 350 and 450 miles of range, and the price to the customer after the EV tax credit should be somewhere between $60,000 and $73,000. And of course, we can do the same exact thing for the compact car, which is likely to come out in the next couple years. We just have to shift that box in the US and sedan chart more to the left, closer to where the Chevy Bolt is sitting right now, while we assume the same trends in the other segments where they're significantly above the average range. And this means that Tesla is likely to come out with a compact car, again, complete gas, just like the Cybertruck, that has about 275 miles of range and should come in around $20,000 to $25,000 after federal EV tax credits. And now instead of scratching my head and figuring out why Tesla has such a huge lead, I think this data proves definitively that Tesla has a giant advantage from a cost perspective and a range perspective, which is what people are most looking for in an electric vehicle. And unless something drastic happens from the competition, this lead is likely to continue into the next decade and potentially even widen as Tesla releases its pickup truck and its compact car. If you'd like to support the channel, all you have to do is click subscribe. About 69% of you are not subscribed, so I would really appreciate your support. And if you want to go above and beyond, I have links to my merch, which is like the shirt I'm wearing right now, and a link to Athletic Greens as well. Thank you so much for watching, and we'll see you in the next one. Bye-bye.